Minutes of the motion be agreed to.
Speaker, I
Point of order. The Honourable David Cunliffe.
Interrupt proceedings. Mr Speaker, my understanding, the opposition's understanding, is that we're currently debating the Taxation, International Investment and Remedial Matters Bill, sir. Without being able to be conclusive about this, sir, it appears that the Minister has been addressing a different bill. Would it be possible to request the Minister to table his notes so we can ascertain
Order.
it's the correct bill?
I'm on my feet. That is not a point of order. Point of order is about the procedure of the House, and what the Minister says in introducing the bill is what the Minister says, and that's on the record. The question before the House is that the Taxation, International Investment and Remedial Matters Bill be now read the first time. I call the Honourable David Cunliffe.
Mr Speaker, the Taxation, International Investment and Remedial Matters Bill is indeed a most interesting bill, and it's a complex bill. Mr Speaker, I want to take Labor's position in respect of this bill in three parts. In the first, I want to briefly summarise the key provisions of the bill. In the second, to outline Labor's position on it. And in the third, to outline some of the reasons for Labor's position, sir. Sir, let's first summarise the objective of the bill and its key provisions. The objective, we believe, has some merit. That is, that it is timely for there to be an overhaul of the controlled foreign company and the fifth regimes, and there is merit in encouraging further outbound investment by New Zealand companies. The reason for that, sir, is, as everybody knows, we have a very substantial international investment deficit in respect of New Zealand's balance of payments. That feeds into, indeed, is the largest part of the financial deficit, which is responsible for our persistent and deteriorating current account. Mr Speaker, there is merit in examining the issue of whether the playing field can be levelled so that New Zealand companies operating overseas do not find themselves in the position of paying tax twice, once in the jurisdiction in which they and their foreign competitors are operating, and a second time in respect of New Zealand tax on the active income part of those transactions. And it therefore, sir, may indeed make sense to restructure the law in the way that is proposed in this bill. Sir, second of all, it is timely for there to be further examination of the old grey list exemption. The grey list is a bit of an anachronism in the opposition's view. 8 countries, mainly the old Commonwealth countries that were deemed to have similar tax laws once upon a time, which have been carved out from the international tax rules and for which equivalence is deemed. So we are willing to explore in the Select Committee whether this bill adequately deals with any residual issues around the treatment of the grey list. And certainly, sir, it is appropriate to remove competitive disadvantage for New Zealand companies in respect of their active income through a range of trading structures. However, sir, we are concerned about the exemptions that are carved out of this bill, firstly in respect of the Australian market, and as the Minister said, this is the jumping off point for many small New Zealand businesses, and it would be the opposition's concern that a blanket exemption for the Australian market may indeed be too wide, and we look forward to hearing submissions on that point at the Select Committee. Secondly, whether the de minimis threshold of 5% is appropriate is an issue that we would expect to see submissions upon. And thirdly, whether the blended hybrid approach that this bill encapsulates between taking either an entity base or a transaction base to the tax rules, we would expect to see submissions on that, and we will be very interested in them. So, sir, those being fair and charitable to some extent are the reasons why the substance of this bill merits consideration and why the Labour opposition will be supporting it to Select Committee in the first instance. We believe it's appropriate that the Finance and Expenditure Committee does indeed call submissions and hear from the public, from the professionals, in the proper way that the tax process works. Sir, Labour has 2 overriding objectives in respect of policy here. The first is, of course, to grow the export economy. And our criticism of the government, sir, is that it has been like a deer caught in the headlights of the global recession, that growth is not returning to the New Zealand market, and that's caught somewhere between wanting to cut its way out, like ACT would have us do, and like the Conservatives in Britain are doing, or perhaps leverage or spend its way out like the US government is doing. But taking neither of those courses and showing no new ideas, the government is stuck and our economy is stuck, and as the weeks pass and successive rounds of data come out, we all understand that the recovery has not come to Main Street, New Zealand, the towns and villages of our country. But, sir, the greatest reservation we have, and why we aren't at this stage able to confer support for the bill beyond first reading, is because we have learned to be, unfortunately, very sceptical of the intentions of this government in respect of taxation measures. And history shows why, and I think it makes it clear to anyone listening into this debate. If you just throw our minds back to the last 2 years, National came in and immediately, under urgency, passed tax reform to drop what? The top tax rate, to deliver gains to the top end of income earners. Then, in Budget 2009, it admitted that it couldn't afford the fiscal cost. Having passed $8 billion of tax remission to top income earners in the first year, it then decided it couldn't go through with years 2 and 3. Mr. Speaker, in Budget 2010, however, while the recovery is still nowhere to be seen, the story changes again. The government breaks its promise not to bring in GST, which has been absolutely punitive to lower and middle income New Zealanders who see their small tax breaks washed away in inflation and still are short at the checkout queue. They're struggling, sir. But in Budget 2010, it dropped the top tax rate again, all the way down to 33 cents in the dollar. And no sooner is the ink dry on that $14 billion tax transfer, mainly to the upper end, we see a little thing called gift duty coming up. Now, why would it be a priority, sir, when the government is already, by its own admission, running a $13.5 or so billion a year cash deficit, obviously having broken its promise to be revenue neutral on the tax package, to then find other taxes it can cut that specifically benefit the top end? Well, the minister would say, in fairness, there's not much money in gift duty. He says only a few tens or hundreds of millions. Yes, well, in real New Zealand, that is real money. And the point, sir, is that it would be a lot more if it were not for the protections which gift duty places upon high wealth individuals transferring income to lower tax structures like those that might be in their children's name, were they not facing some compliance cost and some additional duty for doing so. The point, sir, is that in the history of this government, it has had 2 rounds of upper income tax cuts. It's abolished gift duty, and is it little wonder, sir, that the Labour opposition has a healthy scepticism about its real intentions around maintaining the tax base and protecting government services from yet another loophole for high wealth individuals. And sir, the principle on the Labour side of the fence is very, very, very simple. In these tough times, when money is scarce and every penny counts, everybody pays their fair share. That is the decent thing to do. That is the Kiwi way, and that is what we call for. That means no avoidance structures for high wealth individuals. It means send away the army of trust lawyers and fancy corporate lawyers who are dreaming up tax avoidance structures for the few while the many bear the load. And the burden of proof, sir, is on the government to show precisely why the measures in this bill will not make those avoidance structures worse, will not make those avoidance loopholes worse. How bad are they, sir? I will take but one example. Loss attributing qualifying companies, the much loved or hated LAQCs, $2.3 billion per year of tax avoidance. One of the key reasons why half of the top income earners aren't on the top tax rate, the top 100. Half of them aren't even on the top tax rate, sir, because they use structures like LAQCs. Why, sir? if the government was sincere about fairness, did they not simply ring fence